Hey there, Wall Street winners. It is Monday, July the 8th, and we are in for an interesting week. If we take a look at the Bloomberg app right now, we can see at the top the headline is around France dodging a far right win. So we can see a fairly significant shift in global politics in at least the G7, G10 nations, moving from one side to the other and just becoming tired of what the current governments are or have been providing. I think it's just, we're going to see a big swing to the other side. And I'm not saying everything's going right versus everything going left. I think it depends country by country where you are. I mean, even if you look outside of the G7 and look to Iran as an example, who has tons of sanctions on it and cited for many war crimes and not liked generally as a country by most countries around the world. They put in a leader recently that is more reformist and is more focused on rebuilding relations with the Western countries. So that's a good sign, I think. There's progress there. And then we're obviously seeing shifts in other countries. In Canada, we're seeing significant disgust and almost hatred for our current Liberal government and the things that they're doing to and the changes they're making here to kill business in the country and demotivate people from wanting to start businesses and moving capital offshore instead, where they can get better returns that are taxed far less. So I think we're going to see a swing away from the Liberals here in Canada. And then you've got the US election coming, and obviously that's two grandparents fighting over the White House, and one that looks like he's asleep half the time. That's the current president. And I don't harbor any resentment against the Democrats and what they want and what they're looking to do, but they really just need a better candidate who is actually competent and able to speak in public and make decisions. So there's a lot going on in the political landscape, and I think some of that at some point, it hasn't yet, is going to start to hit the market. But this week is not about politics. This week is all about earnings from the financials and the companies in that financial sector. So what we are going to take a look at here is the futures, and the futures start off in the green. So things look positive today, although just mildly positive. But you do have the Dow up 37 points and the S&P pretty much flat, but up 3 points, and the NASDAQ up 12.5 points. So good news across the board. The AI story hasn't changed, but the narrative around NVIDIA is starting to change a little bit. You had the first first analyst come out with a downgrade on NVIDIA. So that was interesting last week. But the big news of the week is definitely going to be on the financials. So today, as we look across the screen here at the top, crude is off. It was down 70 cents. Now it's down 54. So it is coming back. So if we scroll through our list of stocks we follow, health and retail, somewhat boring this week, I would say. I mean, health at the bottom, slowly making its way back upwards because it took a bit of a hit earlier this year. If you want to buy and hold position, healthcare could be a pretty safe bet in that area. If you're looking for a retail investment, I would go with the low-end retailers, whether it's Dollar General, Dollar Tree, any of those dollar store type of entities, or a Walmart, maybe even a Target, a Costco possibly, because of their ability to grow customers, call them subscribers, that pay to actually shop in their building. And then we've got transport. I think transport, it's taken a beating, and I don't see it going up significantly, but I do think there's an opportunity when it kind of hits a new bottom that it might bounce up and correct a bit. So I have been in and out of JB Hunt over the last couple of weeks and have done fairly well with JB Hunt. If JB gets down into the 157, 156 range, I think it's a very positive purchase. And then you could probably make a percent or two on that when it rebounds up. And it usually happens on maybe same day, maybe a day or two later, but usually the same week. It's up 657 pre-market. wouldn't get too excited about that. I think that's just a little blip there. I doubt that it's going to open up 657 without any news out on that one. Then we get into oil, and oil had a tough day on Friday. No question about that. It is down 52 cents on the crude futures for August 24th, but we're going into hurricane season. And stockpiles of oil have been spoken about recently and are below, storage levels are below anticipated levels. So that means that there is an opportunity for refiners to not only sell oil to be consumed, but sell it to be stored as well. And we've seen our first hurricane barrel touch down in Texas, which is going to affect and slow production. And when supply is impacted, that affects demand. And usually when we don't have enough supply, but we have the same amount of demand, the price will rise. And that's what I do anticipate we're going to see as we move through hurricane season, is that these oil prices will continue to pop. So to me, at 152.78, Valero is a steal of a deal, dropping $5, which is a huge drop, call it 3%. On Friday. Great time to get in, especially if it continues to go down. If it's going to drop another 177, get back into the low 150s or even into the high 140s, I think you're going to do well in, I'd call it a 1 to 2 month or 30 to 60 day hold on some of those oil stocks, the big name oil stocks. Then we get down into tech, and tech is just kind of roaring ahead. It's hard to see tech having a problem right now, not really as affected by interest rates in many cases as other companies. A lot depending on whether they're consumer oriented or corporate oriented in the tech stocks. Those that are both seem to weather a lot better than those that are focused on one of those two markets more than the other. And we've got some positive movement, obviously, in semiconductors. We've got positive movement in cybersecurity, which is CrowdStrike, and those companies that focus there, Cloudflare and Palo Alto. We've seen companies, software as a service companies like CRM or Salesforce, Microsoft, and Workday starting to hit in the case of Microsoft, hit new highs. In the case of the others, come off of a bit of a dip after earnings and start to regain some ground. You've got Meta hitting near highs on Friday. Meta had an explosive day. I recorded a separate video on Meta and released it a couple days ago. Meta had a phenomenal day. It's up again, $2.20 pre-market. I wouldn't be buying Meta right now. Meta, in my opinion, has peaked and it will come back down. So I'm not going to really play that. I think it's too risky on that side. Tesla's made some huge gains recently based on some changes in sales numbers and manufacturing numbers that came out on the positive side based on analysts' thoughts and expectations. AMD's been making some ground, but I think the real sector to focus on this week is obviously going to be financials. So come Friday, we have some of our largest financials, JP Morgan, Wells Fargo, Citigroup, all announcing earnings on Friday. We also have a consumer bellwether, which is PepsiCo, which I don't follow, announcing on Friday as well. So Friday is going to be a big day, and those will come out Friday morning, so before market opens. So there'll be a lot to take a look at there. We're also going to see the consumer price index information come out on Thursday, and that's a pretty important gauge for inflation and whether we're going to see a rate cut coming. A lot of people, 70% of analysts expecting a rate cut in September on the 18th of September, but we're going to have to see whether we're going to convince Fed Chairman Powell that now is the right time. So we will wait and see what's going to happen there. We also have June payrolls report that came out Friday, not this coming Friday. It came out on last Friday, and it showed that the jobs market is cooling a little bit. So another point to maybe suggest that rates could increase when we get into the September timeframe. In terms of the financials, I am still loving SoFi. I think at below $6.50, SoFi is a very attractive purchase. I think that, again, that stock is going to make some very positive moves. Could be to the tune of $1, which is a significant percentage gain there. I think that you have some possible positive outcomes with Affirm as well, Affirm Holdings. So this is a company that allows people that are typically purchasing online to delay their payments, break their payments, say, into 4 monthly payments, so over 4 months, and they make money from that off of interest rates. And then we have Visa. A lot of people are spending on their credit card and they're maintaining balances, and that is helpful to Visa. They're also using the Visa network for transactions, which is helpful to Visa as well. And then we get into the big names, JP Morgan, Morgan Stanley, Goldman, all of which will report, if not Friday with JP Morgan, then come Monday, Tuesday, we'll see the numbers come out from Goldman and Morgan Stanley. I'd be looking for a bit of a pullback or an increase. So let's look at it two ways. Typically what happens before these large financials announce is the stocks will hit a new high, which is what JP Morgan did last week. If you take a look at JP Morgan for the 5-day, it was up around 209, almost 210, and it dropped then down to 204. So if this stock climbs back up to 210 pre-earnings, I would kind of at least sell half of my holdings and wait for earnings, because if earnings are bad, this thing is going to come down. If they're good, it will pop. So you maybe don't want to miss the pop. But if you've already ridden up on the way to earnings, take your profit and just wait, because this thing will come back down. It happens almost all the time. So, and if it doesn't, another stock will bottom out and you can get into that. So minimize your risk, maximize your gains. That's the strategy here. Then the same applies to Morgan Stanley and Goldman. I wouldn't be buying Goldman at 465. I bought it when it dipped down to 449 or 450 last week. And then I got out as it moved up. So let's watch what Morgan Stanley, Goldman, and JPM do this week as we move into Friday earnings for those. And the same would be true, say, for Citibank and Wells Fargo, although I'm not a fan of those two organizations and I'm not an investor in those two organizations. And then the last one to really talk about here would be the small regionals. And this is where I'm still puzzled by the fact that we really haven't started to see major discussions and a narrative around the commercial office market and the mortgages on commercial properties, particularly commercial office properties, which have taken a huge hit after COVID, during COVID and after COVID, with less tenants, leases probably not renewing, long-term 5-10-year leases that are coming to the end of their life are probably not renewing. They're probably renewing at a lot lower rates, and yet the cost of borrowing for these companies, real estate companies, has gone through the roof. So there should be some problems that we're going to anticipate seeing, but we haven't had that come out yet. So that makes me leery of the regional bank sector, which would be, say, Bank of California and M&T Bank. So that's where we are today. Good luck with your trades. If you're liking these videos, please subscribe to the channel.